Hey, yo, hello, and welcome to the channel. If you're new here, hello. And if you're not, welcome back. Anyways, I'm going to be going over today when conditions are good and when conditions are bad on the higher time frame. I'm going to explain how you can use the monthly, the weekly, the fucking yearly chart to understand when conditions are going to be good for day trading without needing to understand news and all this bullshit, fundamental bullshit, okay? So I'm going to be going over it. If you are someone from the Instagram, welcome. Okay. If you're not, go ahead and join the Discord. You can ask me questions. You can comment down below. I don't care. Join up, talk to me. I don't care. I'm free. I love talking about this trading shit. Let's get into it. So, conditions. What are conditions? Conditions are basically going to allow you to play on easy mode. Okay. Imagine loading up Minecraft hardcore, but everything was on peaceful. That's conditions. Okay. Every time you went to beat the Ender Dragon, you one-shotted him. Okay. Or every time you flipped the coin, it landed on heads. Okay, not every time, right? You're not going to win every single trade when the conditions are good, but you have a higher probability. And in a game of trading, we want to assume when we have high probabilities, and we want to take our risks when there's high probabilities. Now, what does a high probability condition look like? I'll be going over it from fucking years ago. Okay, basically, let's zoom out. Right, what is the Nasdaq chart doing on the yearly? Right, these are years. Okay, this is a daily chart, but you can see years. Right, we're making higher highs. Okay, we're making higher highs. Boom, 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 boom. Okay, we're not gonna draw these. Boom. Okay, we had drawdown year because of inflation. Boom, 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 boom. Okay, what are we doing? We're making higher highs and higher lows. Okay, that's how it is. Unless the market goes to fucking zero, the U.S. explodes, everybody dies. We probably will continue to do this. Okay, now I want to get in on that as a day trader. Right? You're a day trader. You want to get in on that. How do you recognize when it is the best possible times to risk your money? It's pretty simple, okay? When we have a large sell-off at any point, this is a monthly move. Okay, let's look at the monthly time frame. These are monthly moves. We basically just want to get to the part where we are selling off, right? You play the sell-off, and then you play it on the way back up, and you do not play the chop. So the markets move in higher highs and higher lows, right? That's what it looks like. Okay, that's what it looks like. But in between these higher highs and higher lows, it actually kind of looks like this, right? So boom, 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 boom. That's what it actually looks like. Okay, whether it's like this or like this, whatever it is. Okay, that's what it actually looks like. So we basically just want to stay out of that consolidation, that choppiness. We want to stay out of that. And why do we want to stay out of that? That's because it's going to be whiplashing around. There's indecision fundamentally on the news, whatever. I don't trade news, so I don't really know. But you understand that. Okay. So as you can see here, okay, this was 2025. It's pretty recent, 2025, right? You can see there's a monthly fair value gap here. Or honestly, without using ICT concepts, we'll just use the Fibonacci retracement. So we can just take the tool and just go boom to boom, right? Low to high, okay? We come down, we tap the 0.5, we're in a discount. We tap into, okay, I'll use some ICT concepts because I do trade some ICT concepts, right? We have, I think this is a breaker block or whatever, order block? Okay, no, it's an order block. Sorry. We have an order block here. I don't really use order blocks, not gonna lie. So I'm just not on market. But we have a monthly fair value gap here. Okay. We probably have even higher time frame stuff right here. But anyways, you can see that we clearly sold off aggressively here. 26% down. Wow, the world is fucking ending. What happens? We ripped 52% within the next year. Okay. So high probability conditions are basically just getting in on not trading this consolidation, even though this is pretty good because it's kind of going up. It's not really consolidating, it's going up, right? These few months probably consolidating, and then we come down here, and then we want to trade up to the highs, and then back to the down part, and then back to the highs, and then we don't want to play in this consolidation. We just want to get down and then higher. That's just how we want to trade. Those are conditions. Now, obviously, taking longs are going to be a lot easier on the Nasdaq. Now I'm going to go to the daily chart. You can look here, and you can see that this here. Actually, I'll make it even hyper focused. This section right here, this is where people blow their accounts. This is where people have trouble trading. And you can recognize this pretty early. If we are overextended, we're pushing through all-time highs, and then we just kind of stop and we start disrespecting. Daily fair value gaps, and we start breaking structure to the downside. We start, consolidating. As you can see, like we just whiplash around. We're not going to the highs, but we're not going to the lows. You can kind of understand that the next few days, next few months, next few weeks are going to be kind of consolidation phase. And this is not a bad thing, right? Because you know that we're going to prepare for a higher time frame dump and then a reversal, or a pump and then a dump. You know what I'm saying? So basically here you would not be able to take any trades. You would take trades, you would be risk off. Okay, you wouldn't be putting your balls to the walls here. But the second you see that we're getting strong displacement to the downside, we're getting strong displacement to the downside, and we're going for all of these lows. Okay, we're going for all of these lows right here. Okay, you can be more risk on all the way down here. And then the second you see the huge candles, the huge reaction, like a 14% on the day. That's a 14% candle on an ETF. That's trillions of dollars entering the market at once. You can kind of assume, okay, now we're done that kind of we're done this dump, and we're going to reverse the upside. And it's not going to consolidate down here, right? We had a little bit of consolidation a few days, but it's not really that long, right? This took how many days? This took 91 days, and then this took 42 days, and then this back all the way up to the highs took 81 days. Okay, so this move right here is great. This whole box right here, this is great conditions to trade because there's direction to it, right? We're going down or we're going up. We do not want to be trading the chop, okay? And then, yeah, so you take it all the way up. What happens? We go up, we go up, we go up. And then what happens, right? And then this is October 2025. We start stalling out, right? There's indecision right here. You can see this is that FOMC meeting. Anyways, fuck news anyways. It doesn't matter. Then we start fucking failing to go to the highs, failing to go to the lows, and we're obviously consolidating here. Let's draw it out. This is a consolidation. Even, honestly, even all of this, right? We have the range high, okay, range high, range low, and we're never going to them, we're never breaking them, we're never going lower. So this whole time is so hard to trade. And I know that because I traded this time. This is when I was learning to trade, okay? I blew so many accounts in this phase, but it was an important lesson because I understand now, okay, that trading during these conditions is a bit harder. Okay, it's a bit harder. Okay, you have to be a little bit more risk off. You're not going to get a trade every single day. You might get a trade every single 3 days. Maybe not even a trade a week. Anyways, it doesn't matter. Risk off conditions. Now, the second we break these lows and then get a strong displacing candle to the upside, okay, we can take okay, honestly, even this dump wasn't that crazy, okay? In my opinion, I thought it would go lower. But the second we got a strong displacing candle to the upside and we start, making higher highs, higher lows, okay, this is when we have good conditions because you can see how fast it happens, right? In 29 days, we went up 18%. And then in 168 days, we didn't even move, right? We stayed between this range. So you can see that. And it's happening again here too, right? We have this consolidation, right? The second we saw that there's a huge dump off and then, we try to go back to the highs and we failed, there is this huge consolidation, right? These conditions are kind of harder to trade, right? That's just how it's going to be because we're whiplashing around, right? We're not going to go to the lows. We're not going to go to the highs. We're just whiplashing. So then when we see this type of thing where we come lower, and now we're going higher with strong displacing candles, you can kind of assume that the next few days or next few weeks or maybe even a month, 2 months is going to be good conditions because we are out of that consolidation. And now we're targeting back the highs, the all-time highs, right? So this is kind of just a quick lesson on conditions, showing that it happens all over the years. Trading in higher time frame chop is obviously going to be harder because you are going to have to play a little bit more conservatively. You're going to take less. You're not gonna have a day where you're making fucking billions. Okay, it's just not gonna happen. You're gonna have to take base hits and stuff like that. But now that the conditions are good, and conditions are good whenever we come down and sweep and come down and get strong displacing candles, then you should be being risk on. And these are the times we're waiting for, right? Trading is not a marathon in my opinion. And some people say it's a marathon, not a sprint. No, I completely disagree. It is a marathon and a sprint. Okay, you need to sprint when conditions are good, and you need to take your base hits and jog as a marathon when we are consolidating like this, right? You could still win trades and up in this consolidation, but it's more likely you're going to win trades on the way down here and then on the way back up. So that is basically just a video on conditions. I think a lot of people don't understand that, okay? And honestly, it's helped me so much with trading, okay? So I think it's one of the most important things you could learn is when is risk on and when is risk off, okay? This is literally talking about the daily time frame, the monthly time frame, okay? The yearly time frame, okay? These are monthly moves, right? These are big moves, right? So your 1 minute chart inversion fair value gap or your 1 minute order flow bubble is not going to change the direction or how easy it is to deliver. Anyways, thank you guys for watching. If you guys understand what I'm saying, go ahead and drop a thumbs up. If you need a better explanation, I have a Discord. You can go ahead and comment down below as well, and I'll answer your questions. You can join the Discord. You can message me on Instagram. You can even watch my Instagram videos because I talk about a lot of this stuff. With that being said, I'm not that good at doing these videos. I'm going to get better. And thank you guys for watching. Okay, I'll see you in the next one.